JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 9th of August 2021. So yeah, welcome everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, check us out here on jfdbank.com and click on the research tab right there on the top. So now then guys, so I hope you have prepared your morning espressos with you here, or coffees, whatever you like guys. But yeah, let's jump into the chart. Now the first one I want to pick up here is Nikkei 225, and you can see that the index kind of still is trading near this 200-day EMA, slightly above it, but doesn't really move further away from it. So, and at the same time it's kind of stuck in between some of these lines here, like for example this short-term tentative downside resistance line taken from the high of the 15th of June, and it's also stuck still above this this other line, the level here, to be more precise, the 27,385 territory right here. So in other words, for now we're just kind of observing the price action here, and in a way we're waiting for that clear breakout here. Now for the upside, now previously I talked about this level right here, the 28,034, sorry, 36, 37 territory. But looking at all this picture, it seems that probably the safer option here right now is to wait maybe for a push above the above this downside line first, and then aim for the upside. But instead, if it reverses south here, then we'll wait for a drop below this hurdle here, the 27,385, and then yes, we will consider some lower levels. So for now, we just basically need to kind of wait here. The Hong Kong's Hang Seng Index now here, so far so good. Everything's working according to the plan. The plan was to see that a nice little rebound here from this 26,000 territory, and then maybe a push higher towards this downside line taken from the high of the 28th of June. And yeah, so I mean, for now we're just on the way higher here. We're on the way north. Let's see if we can reach this downside line. So far we're, like I said, on the right track. If we do reach this downside line, then of course the big question, will it hold? Will it hold together with the 21-day EMA? And if it does, then another slide could be possible. If it doesn't, and we clear this downside line and we push above this 26,862 territory right here, marked by the low of the 9th of July and near the high of the 26th of July, then yes, potentially more buyers could join in. The German index, DAX, and yeah, we had a nice good push higher last week, but we just fell by just a few points from reaching that all-time high, which is roughly around that 15,811 territory right here, which was reached in July here, mid-July, and then we kind of stalled here and remained remain below that hurdle. Now, of course, looking at this, all this, it seems that yes, there is a big temptation to aim for some higher levels. However, guys, let's wait for a violation of that barrier first, and then kind of target the upside here. So long story short, if we do clear this barrier, this 15,811 territory, then yes, we'll go for some higher levels. Looking at the cash index right now, we're seeing a slight correction here to the downside. Now, of course, some of you might be maybe worried about this little doji that we have here formed by Friday's candle, but again, let's not rush into anything. First, let's see how this is going to open up today. It will probably open up a little bit lower, but nevertheless, I mean, if it stays somewhere above this highlighted territory, then yes, we will kind of let's say continue aiming for the upside. Even if it drops below this, and even if it starts sliding here to the downside, still let's not forget that we're trading above this upside line taken from the low of the 19th of March 2020, so there is still a chance for the bulls to step in somewhere around here. But again, from the very short-term perspective, yes, keep your eyes on this area right here, which is roughly around the 15,700 mark, and if it holds, then yes, a nice rebound could be possible. Now S&P 500, guys, created a new all-time high on Friday. We overcame the previous one, which was around the 4,430 zone. And yeah, so now we can see that we are also trading above this upside line here, taken from the low of the 19th of July. So if it continues to provide support, then yes, we'll continue aiming for the upside. Looking at the cash index right now, we can see that yes, we are also seeing a slight corrective move here lower. We are back below the previous all-time high, and this below this 4,430 territory, but we're still above this upside line. So in other words, if it can somehow continues to provide support, then yes, we could see a nice move lower. The only thing is that that could kind of worry maybe the bulls here in the near term is the fact, for example, if we open up today here below Friday's low here, then maybe, just maybe, we could see here a possible island reversal here, because we have this it's not an ideal one, I would say, because I would prefer to maybe have a nice little gap here in between the Thursdays and Fridays candles, but again, if it starts, like I said, drifting to the downside, maybe this also could be seen maybe as a slight little a small little shooting star. However, again, it's not really an ideal one, so a lot of non-ideal situations here, I would say, but again, let's see how this is going to play out here. For now, probably I'm going to stick to this little short-term upside line. If it breaks, then I would consider a bit of a move to the downside. If it holds, well, I mean, we might not be done with the upside. The DXY, the dollar index, and here we had a fantastic explosion here to the upside on Friday. Good numbers came out from the US. So yep, there was a bit of positivity here in DXY, and as you can see, we've climbed above this barrier. I talked about this level last week on Thursday, this 92.32 territory. We've managed to clear that nicely, and what I said to you then, that that's where I'm going to start aiming for the upside, where if we do clear this barrier, and my next target will be around the 93.19 level, which is marked by the highest point of July, and then yeah, we will take it from there. I want to see what's going to happen after that, but for now, I'm a little bit more bullish than bearish on this one. We could see, of course, a little corrective move here lower. However, what you can do here as well is also keep your eyes on some of these short-term tentative upside lines. So for example, like this one here, let me just draw it a little bit nicer here, something like this, not like this, just bear with me one moment, something like this, there we go. So you can keep an eye on this upside line. So even if we retrace a little bit lower here, if we stay above this upside line, then yes, a nice reversal here, reversal push higher could be possible. We need to get rid of this downside line, no longer needed. And I would say that, yeah, so if we want to aim for the downside here, well, certainly if a break of this upside line here would be needed, and then maybe also a drop below this 92.32 territory, which I looked at previously, could do the job for more sellers. So keep that in mind. Jumping into gold, so of course gold declined heavily here. I mean, not to mention Friday's decline. It declined today as well, and this morning during the Asian session. And look at this move here, guys. So first of all, let's start from the beginning. The idea that I talked about last week, that if we break this little short-term upside line, this could open the door towards this other upside support line taken from the low of the 20th of May of 2019, and you can see we managed to reach that. We also managed to even overcome it. So on Friday we came very close to it, so basically kind of did act as a good area of support, so that's a good tick here. But now the big question here is, can it stay below this upside line taken from below the 20th of May of 2019? Can it also stay below this 1750 territory right here, marked by the lowest point of June? And if it does, then of course, yes, we will continue targeting the downside. We'll aim for the same kind of area where it did drop heavily this morning. So as you can see, it came very close to testing the lowest point of March here this year, near the 1677 territory. But for now, my main concern here is, will this commodity remain below this upside line, this long-term upside support line, the one that I just mentioned, and will it stay below this 1750 zone? If it does, then well, we could see more declines. If it doesn't, I'll take it from there, because then I want to see if it's going to reverse, and if we'll have enough steam to reverse back to the upside here. So, but like I said, we'll take it from there. Silver, similar story, of course, drifted lower, but basically from the technical side, I mean, what I talked about last week was that if we drop somewhere below these areas here, and especially this 24.50 zone, then well, I mean, further declines are possible. And as you can see, we did drift lower. We moved all the way here towards this 22.39 zone. So this happened this morning here, and we also managed to overcome the lowest point of March as well. So yep, a lot of negativity here. However, as you can see, there's a bit of fresh air here for the bulls, because we have climbed back above this lowest point of March. And then now again, similar story as with gold. Let's see if we can stay below this area, below this 23.78 territory, which is the lowest point of March of this year. And if it does stay, then yes, further declines are possible. If it doesn't, maybe we'll get a nice little rebound, but we'll just have to take it from there. For the upside, guys, I mean, I would need to see this one maybe climbing. Well, this is where it's going to be an interesting one, actually, because maybe I would actually prefer to climb all the way back here above the 200-day EMA, and then, yep, I'll consider maybe some higher levels. But until then, it could be a little bit of a difficult one. Jumping into WTI oil very quickly. So oil also is declining. So yep, we are dropping below. We have already dropped below this upside support line taken from the low of the 5th of April. I talked about this line previously. We also fell below the 67.58 zone, so also mentioned this level. And at the moment, everything's kind of opening up for a possible further decline, where the next target could be the lowest point of July near the 65.11 territory. But again, let's be very careful. Again, the last week we didn't really get that close below this upside line. This is what we're seeing today. But if by any chance, I mean, the dollar index kind of reverses sharply to the downside, maybe we could see oil actually climbing back above this upside line. So that's why, although yes, we are seeing some negativity, but it's an early morning here in Europe, so let's see how this is going to play out. Maybe we'll get a bit of a corrective move here back up, and we could test maybe the 108 EMA here shown as the green line, which is roughly around the 67.20, something like that area. Yeah, then we'll go from there. But again, like I said, for now I'm keeping an eye on this upside line and this 67.58 territory right here. Quick update on Bitcoin. So yep, continues to kind of move higher. So last week, if you remember, I talked about this scenario right here, which I said that if this barrier somehow provides resistance, then yep, another slide could be possible. However, nothing like that happened. Instead, we broke that area and we climbed higher. And not only that, we also overcame the previous last week. We overcame the previous highest point of August near the 42,532. Let's redraw this chart a little bit, guys. Let me remove all the drawings and please start fresh on this one. So, like I said, yeah. First of all, we have overcome this 42,532 territory. You can see that we did get a bit of a decline, but we're now currently getting a little hold up here, slightly above that level. So we're going to keep an eye on it. The level that we managed to reach here in August, the highest level is around the 45,250. So that's a nice, good, beautiful number here. Another area of support that I'm going to keep an eye on here is this one right here, the lowest point, the current lowest point of August, near the 37,318. And yep, at the moment, I would say that's what we need to keep an eye on as well. This little short-term, although tentative, upside support line taken from the low of the 20th of July. And then, yeah, we'll take it from there, guys. If we do clear this area, we might see maybe lower levels, but I would prefer to wait for a drop below this 37,318 territory right here, just to be a little bit more on the safe side. And that if that happens this month, then well, this would confirm, of course, a new low for this break. It would confirm a new low for August. Jumping to AUDUSD. So last week I talked about this barrier right here, the 0.7410. We kept flirting with it, but we never kind of stayed above it. So and this is what I talked about. I said that we wait for that daily candle to remain, the body of it to remain above this area, above this barrier, and then at the same time we could see maybe, well, not maybe, but we could see the body also staying above this 21-day EMA, and potentially more buyers could join in, but we didn't really get that. We only got some false breakouts, and instead, yep, we started drifting lower. So first of all, let me get rid of this downside line, no longer needed. If you're looking for the downside, then in a way you could start aiming maybe lower from here if we drop again below this upside line, taking from the low of the 21st of July. But I would prefer to wait for a drop below the 0.7290 zone right here. This way a break of this barrier here would confirm a forthcoming lower low, and potentially more sellers could join in. Quick update on USD CHF. So this one pushed higher. Of course, the stronger dollar did do its job here on this pair, and we are approaching slowly this downside resistance line taken from the high of the 2nd of July. We also have another downside line right here, which also kind of almost coincides with this other downside line that I talked about. But in other words, we're keeping an eye on this area right here, and that's roughly somewhere around that 0.9190 zone. If it all provides a good hold up, something like this is where I could shift this arrow a little bit like this, and yep, another slide might be possible. If you're a little bit on the careful side, I would say what you can do here is you could wait for a move back below the 0.9118 level right here, and at the same time, if we drop below this hurdle, then we are placed back below all of the EMAs on the daily chart. So that could attract more sellers into the game. But again, at the moment, at this point in time, we are pushing higher, or at least trying to push higher. But if we continue to do so, then keep your eyes on these two downside lines. If they provide a hold up, another slide might be possible. But initially, we'll only consider a short-term slide here to the downside. If both of these downside lines break, and then the rate climbs above the 0.9233 territory, that's where we could maybe start considering some higher levels. But again, we do have a bunch of obstacles here on the way higher, so we'll go slowly on that one. A quick update on GBPAUD, and yep, so just a quick update actually what I talked about last week, and yeah, so far so good. This idea is working out. The idea was that if this area here provides support together with this upside line, together with this 1.8762 territory, then yes, a nice rebound here might be possible. Well, we are getting that rebound. Can it continue going higher? We'll just have to go slowly on this one. For now, like I said, I am still sticking to the upside. However, if something changes and we see a sharp break of this upside line and a sharp drop below the 1.8762 territory right here, now that's where I'll start considering some larger corrections to the downside, because don't forget that we're still trading above some of these upside lines. GBPJPY, very quickly on this one, looking quite positive. We can see that it started forming higher lows here, but in order to go for a higher high, well, we would need to see a break of this 153.44-45 territory, approximately around here. And if we clear that, then yes, this is where more buyers could join in, guys. And yep, we could then start maybe targeting the area near the highest point of May, which is approximately around the 156.09 level. And then we'll take it from there. Again, at the moment, it's a pretty straightforward one, to be honest. In order to aim for the upside, we need to see a clear breakthrough the highest. I think that's the, sorry, not the highest, but the high of the 29th of July near the 153.45 level. Euro against the Turkish lira. This is just a quick update, to be honest. Sometimes I do like to look at these exotic pairs here, and you can see that the Turkish lira is devaluating against its European counterpart, but we are at a very interesting spot here from the technical side, and you can see we are testing this downside line taken from the high of the 2nd of June. So in other words, if this downside line continues somehow to provide resistance, then yes, another slide might be possible. But if it doesn't, then we see the rate climbing somewhere above this hurdle, the 10.24-25 territory, approximately around here. Then yes, we could go for some higher levels. And finally, EURUSD. So again, we've managed to reach one of my targets here, so the 1.1752 territory. I spoke about this level last week, and so that's a good result here. But now the big question here is, can we see a further decline here? Well, of course, if DXY continues to rally, then certainly EURUSD might see this one, might see like lower levels here. And to be honest, looking at this picture, if we drop somewhere below this 1.1752 territory right here, marked by the lowest point of July, then well, this could open the door towards slightly lower levels. I'm not going to drag this one way too much to the downside, because initially I'm going to aim for this lowest point of March and near the 1.1704, and then we'll take it from there. If it clears that, then yes, that's wonderful. This confirms a new lower low, and to be honest, that would confirm a new low for this year, because again, this is the lowest point so far at the moment, and this 1.1704, and if we clear that, then certainly yes, this could open the door towards the lowest point of November near the 1.1603 zone, and then yeah, we will take it from there. So guys, that's it for this session. I really hope you found it useful, and thank you very much for watching and listening. I really appreciate your time, guys. So if you want to catch me tomorrow morning, as always, at my trader's Espresso, that's 6 o'clock GMT time. For now, have a wonderful trading day today. Stay safe, have your stop losses in place, and everything will be fine. So thank you very much, and bye-bye.